Whew. Come on, LinkedIn. Got it. Good morning, everybody. Good morning. Sorry to keep you waiting. I am a bit late today. But I was getting late today. Sorry. Just. No. Not the right jokes to crack. But, yeah. I'm sorry I got late. Because of technical difficulties. Had to switch off and switch on my laptop, which took a lot of time. It's already 8:11. I can't wait. So I'll have to begin. I'll just test myself on the audio bit. So I'll have to begin. I'm audible on YouTube. And I'm audible on LinkedIn. Am I? LinkedIn has a lot of latency. Yeah, I'm audible on LinkedIn. I'm audible on YouTube. So I'll have to go. And if there's something wrong happens as far as the audio is considered, I apologize in advance, right? But good morning. Ba-bum-bum. Ba-bum-bum. Ba-ba-ba-ba-ba-ba-ba-ba-ba-ba-ba-ba. Bum 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 bum. Bum 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 bum. Hello everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, well, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily dose of insights and analysis which don't lead to paralysis right before we punch in, our daily mental workout. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, you've got to follow tradition, right? You know the tradition. The beautiful sacred tradition of the simultaneous sip. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having water with some black pepper in it. And here we go. Oh my god, it's beautiful. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. And that's such a nice thing to say. With that out of the way, let's begin. You're ready for the mental workout, right? You're stretching your mental muscles. Mr. Shamir KM says good morning. Good morning, Mr. Shamir. Very nice to meet you. Take your front seats. You're looking pretty. So Apple is essentially hiring a new COO. That's supposed to be a big deal because he's also somebody from Indian origin. UP-based Mr. Khan is going to be the COO. This means a lot because the current CEO of Apple, Mr. Tim Cook, was also a COO. So this operations role, this whole geopolitical tension, the entire manufacturing gamut, that is a tough play to manage, especially at Apple's scale. Because if you remember, we discussed about how Apple's contract manufacturer Foxconn's India plant saw 200 of its Chinese executives going out of India because China called them back, right? China saw a lot of intellectual drain happening towards India. Just in a bid to stop it, it just essentially called its people back. Now, those kinds of problems are very hard to manage for a company like Apple. So this is a big deal. This is a big deal. So now, right now, what you're looking at is the COO of Microsoft being an Indian origin guy, COO of Google being an Indian origin person, COO of Tesla, also an Indian origin person. Now CFO of Tesla, COO of Apple, also an Indian origin person. But does this mean anything to India? Are we supposed to be, you know, beating our chest, saying that yay, these are all Indians? Well, yeah, we should ideally, but it's a tough sell, right? It's a tough sell because people going out of India is a big problem for India, especially rich people, especially all the educated, talented people. If they go out of India, India has a lot of thinking to do. But for now, we should be happy. Speaking of happiness, uh, Mr. Elon Musk is not happy because the CEO of Tesla, Twitter X, she has quit. So she just joined like a year ago, not more than that, maybe less than a year. Linda Zaccarino, she was the CEO, but she's quit. Now Mr. Musk is going through a really tough time right now because of all the Tesla stock going down. Tesla stock went 8% down yesterday, day before yesterday, 8%. So, you know why? Why did Tesla stock go 8% down? Anybody? Just think about it. Anybody? You have 5 seconds. I'll give you 5 seconds. Why did Tesla stock go down 8%? We talked about this. Oh, yeah, I heard you. The Independent America Party, right? Now, that America Party, Mr. Musk's greater involvement in politics, yet again, is huge. It's a huge problem for all the shareholders. They get scared. So I was just listening to Mr. Scott Adams, and he said, it's becoming tough to be a Tesla shareholder now, because it'll be nice for the stock to go up. Politics, Trump. Mr. Shami, you're right. You're right. You're absolutely right. So Mr. Musk is looking at a new political party, America Party, and he said that he's serious about it. So people are suddenly very scared about Tesla. But the long-term story of Tesla, when I say long-term, I mean the next year or so, that looks incredibly bright, right? Because in 2026, Tesla will come out with something called Optimus, which is the humanoid robot, which can literally play piano, dance. It can do bhangra better than me, and it can do a lot of stuff. And it's basically a human companion in robot form. And then there's Robotaxi, which is the self-driving taxi service of Tesla. So both of these products are gonna come out, and the Optimus Prime product, I'm sorry, Optimus Prime is the Transformers movie character, but Optimus is the highest interest product in the history of all products. So that's going on. So maybe, just maybe, this is an opportunity to buy, right? But you can never be sure. Because there's a very, very big news today. Nvidia has crossed $4 trillion in market cap. $4 trillion in market cap, Nvidia. Can you imagine? $4 trillion, about $4.2 trillion is Indian GDP. Okay? And just Nvidia's market cap is almost equal to Indian GDP. There's something called a Buffett indicator. Buffett indicator is the ratio of the market cap of all listed countries in a companies in a country, and then the GDP of that country. So, let's say it's India, right? So India has Tata, Reliance, all the listed companies in India, market cap combined, divided by the GDP of the country itself. That is about 117, 120 right now. That means that India's GDP is $4.2 trillion dollars. So all of these companies' market cap combined is at $4.5 trillion dollars essentially. Okay, 4.5, 4.6. And just Nvidia is at $4 trillion dollars. So just Nvidia might just eclipse the combined, you know, uh, market cap of all the companies existing in India. How does that sound to you guys? What do you think? What do you think? Just share your thoughts on this. How incredible is that? That just one company uh, is looking at $4 trillion dollars. The next most valuable company is Microsoft. The next is Apple, and so on and so forth. So this is just incredible. This is crazy. And speaking of crazy, there's a lot of crazy things happening right now. Uh, Viceroy, it's a short selling firm based out of US. So it's like Hindenburg, essentially, because Hindenburg is a popular short seller, right? So you'll recognize Hindenburg. So Viceroy is another player in like that, and they've shorted Vedanta. They've come out with a damning report on Vedanta. They say that Vedanta Resources is a parasite bringing Vedanta down, and this particular company is a Ponzi scheme which is debt laden, and a lot of inter-party transactions are happening, which essentially means that the stock is doomed, they say. Now Vedanta people are refuting to these allegations. They are saying that this is, the timing is circumspect and everything is wrong. However, how many of you remember, viewers of Thinkers Frequency would remember, we talked about Vedanta quite a lot. Do you remember, folks? Do you remember? Would you like me to tell you again about the Vedanta story? On how it's such an incredible story that everybody just freaks out? Uh huh. Oh, yeah, I heard you. I heard you. You remember. So, Vedanta essentially is a huge group. It's into minerals, essentially. Minerals, refining, mining, and so on and so forth. Okay? Mr. Anil Agrawal is the chief of this group. One of its companies is called Hindalco, which is a partnership for a company with the government of India. Government owns like 29% stake or something of that sort. So Vedanta Resources and Vedanta is the parent company. They had been struggling with a lot of debt, like an incredible amount of debt. Okay, in $10 billion scale. Now they weren't being able to pay their debt back, and they weren't even able to roll over their debt. So what you do is, when you have a lot of debt, you take another debt to refinance that old debt, right? This is how it happens. So you just take a debt and you pay interest, and if you're finding that that debt is a problem, so you try to refinance that debt. You take another debt, pay that debt off, and now this debt is what you're going to pay. That's how it happens. So Vedanta tried doing that, but refinancing also became a bit of a problem. Okay, because huge debt overhang, right? Huge debt overhang. Now what these people did was, they had a lot of uh, companies, right? Vedanta Aluminium, Vedanta this, Vedanta that. So what they wanted to do was, they wanted to split those companies. Why split those companies? Now, viewers of Thinkers Frequency would remember, we've talked a lot about this. When you split a company, when you demerge a company, keep some stakes in it, it becomes a little more independent to raise capital. So the plan of Vedanta was to demerge all of these group companies, raise money in those companies, and then, use that money to refinance the debt. Okay, now that particular bit is on. However, all those companies also assume some sort of debt, right? So they also get a debt overhang. the group company's debt overhang has a debt overhang. So what that company at the end of the day tried doing a lot was that it started getting dividend money from the group companies. Okay, so let's say if your company exists, okay, how can you just take its money to pay the overall debt? You know, you are a shareholder, major shareholder in this company, and this is your company, it makes money. What can you do to just take money out of it and pay the group level debt? You take out dividends. Okay, so you issue dividends. What this company Vedanta started doing was it started issuing a lot of dividends to itself in a bid to just pay some debt back, right? So all of these things Vedanta has been doing. However, Viceroy has essentially shorted the stock and given a Hindenburg type report on Vedanta. Now it's and then Vedanta stock went down like 10% uh, in that particular day, 8% intraday. So they've called Vedanta a Ponzi scheme. Oh my god. Vedanta had been in trouble, and with this, I don't know how much of real tensions would arise because of this, because they are pretty thick, right? Those people are pretty thick. Moving on, speaking of thick, uh, Mr. Bansal, Piyush Bansal, the founder of Lenskart, is essentially looking at shoring up his shares before Lenskart's IPO. So viewers of Thinkers Frequency would remember that Lenskart is going for a $10 billion IPO, and we did a deep analysis on how that $10 billion valuation might or might not make sense, right? So in any case, the IPO is going to happen, whether it's 7 8 billion, whether it's 10 billion, that's immaterial. Most likely it will be a $10 billion value IPO. However, what Mr. Bansal is doing is he's trying to buy back some shares at a $1 billion valuation. Just it's basically an award to retain founders, right? So they get a preferred share at a lesser valuation, and now that share, because when the company IPOs, there should be something for the founder, right? So Mr. Piyush Bansal, along with his wife, are the co-founders, and then there's another co-founders, and so on and so forth. So they are essentially looking at shoring up their shares a few percentages. A couple of percentages of a $10 billion company essentially means $200 million. $200 million is like 1,600 crores. So it's basically a 1,600 crore reward award which they're seeking from their shareholders. They'll get it, and good for them. Good for them. So we discussed that Lenskart, when it's getting valued, it cannot be getting valued at $10 billion. It cannot be, because globally, so when you're looking at valuation multiples, what you're going to do, you're going to look at the peers, right? So Lenskart doesn't have an Indian comparable. However, Tata Titan I plus is essentially existing, right? But it's merged with a lot of group entities. So Titan is the entity which also has Titan Eye Care Plus. But Titan also has jewelry and so on and so forth. So it's difficult to compare Lenskart with Titan. However, if you must, Titan is a 10 times bigger company, growing at just as the same rate as Lenskart. It is extremely profitable. It has net margins at 5% or something. And it's getting valued at a 5x revenue multiple. Why is 10 Lenskart getting a 12x multiple right now? So its revenues are at 5,200 crores. Maybe it makes 700,000 crores revenue in FY25. If it does, it's basically getting a 12x multiple. Why? How? Like a company which is 10 times the scale of Lenskart, growing as fast, profitably, is getting a 5x multiple, and you're gonna get 10x. Okay, let's leave Titan. Let's go to the US, right? Or Europe. Let's go to Excelor Luxottica. That's the biggest company in the same space as Lenskart. and it's valued at roughly $100 billion, right? It's a very, very big company. It's a cash machine. It grows at 6%. And the fact that Luxor Exotica, Essilor Luxottica, is essentially tying up with Meta. Meta has like is bought 3% of its shares. It's buying 5% of its shares. All the Ray-Ban Oakley you look at, that's Essilor Luxottica. What's its revenue multiple? Its revenue multiple is like 3 or 5, you know. Then there's Warby Parker, which is just like Lenskart but in Canada, right? It operates at the same scale as Lenskart, similar profitability profile, similar D2C mix, a bit asset light, a bit capital light because it's not making its own factories, it's not running its own stores. It has a lot of retail partnerships. What's its revenue multiple? 3.3x. So on what basis is Lenskart getting a 12x multiple or a 10x multiple? It's just doesn't make sense. So that's why we wrote a very, very long analysis saying that if Lenskart debuts at a $10 billion valuation at an IPO, I'll personally short the stock, you know. So that was interesting. That was pretty solid stuff. However, for now, it's great news for Mr. Bansal. I congratulate him. Moving on, uh, JSW looks up stake as SAIC takes a backseat. So JSW is in partnership with uh, MG Hector. If you remember, MG Hector was Morris Garages. It was essentially a British company, but it's now a Chinese company. It's a very, very big player as far as electric vehicles is considered. Uh, Mr. Tushar Tiwari asks a question. Warby Parker is a Canadian company. Mr. Shamir KM, Warby Parker. Uh, and Mr. Tushar Tiwari asks, it won't be directly on FNO for shorting? No, so there are some norms for it, for a company to be eligible for shorting. Of course, after those norms are passed, I'll be looking at something like a short. I won't be doing an intraday short. Intraday short would be very, very complicated because let's say Lenskart does an IPO at 10 billion valuation, right? So what you expect is that the valuation would get a little bit of a pop, like a 10-15% or maybe 7-8% pop on the first few days, maybe 20%. So at its peak, Lenskart will be looking at a $12 billion valuation at the market. That's when you're short. But still, intraday short is a bit complicated and it won't be eligible for it. So there are some sort of nitty gritties for which I'll have to work around, but it'll be a very profitable short, is what I believe. In let's say a month or two horizon, you know, that's what I personally believe. So I'll take a look at it. We'll cross that bridge when we reach there. Nobody knows what's gonna happen tomorrow, right? So let's forget about the next 5 or 6 months when the company essentially debuts. So I was talking about JSW. So JSW is essentially looking at upping its stake, and JSW has future plans of launching its own electric vehicles. So JSW is killing it, right? Jindal Steelworks, it's just killing it. It's absolutely on fire, on fire. So we talked a lot about this. Viewers of Thinkers Frequency would know. Just yesterday we talked about a very interesting case as far as JSW is considered. I won't repeat it, though I am tempted to because it's such a nice story. But I'll just give a shot of it. JSW was at odds with the current regime. It's not pro BJP. It has always been uh, uh, I'm sorry, I got distracted with the comment. So they had been at crosshairs with the Indian regime and also its supporters, like let's say Z News. So JSW uh, went on a meeting with Z News and they said that we'll give you money, you give us favorable coverage, Z News in that meeting said yes. Apparently, JSW was recording that meeting. They said we've done a sting on Z News. Z News is corrupt. So Z News got embarrassed. Z News said that we were actually doing a sting on JSW, and they ended up doing a counter sting. So that's crazy, right? That's interesting. So even though the current regime and JSW weren't friends, JSW has flourished a lot in the given years, which is great, right? So JSW plans to raise its stake in JSW MG Motor India, its car manufacturing joint venture. The Chinese company has decided against committing further capitals to India, instead prioritizing investments at home. So the company is SIAC, the Shanghai whatever, is not looking at upping its investment. So JSW is taking over, and that's okay. Mr. Urmil Purani asks how teens in the USA are making millions with apps with less than 5-10 people. It's not happening in India. Well, I don't know. What's the question? What's the question? 5-10 people, the garage entrepreneurship story. Well, that happens in US, not as much in India, where we're a fundamentally different country. Moving on, a lot of interesting stuff. ED has sounded an alarm on missing trails to UAE properties. So, what used to be happening was that information sharing pact earlier with UAE and India didn't used to have a lot of details on real estate holdings, right? But now the Indian taxmen have found a way to get an info on the real estate holdings of these people. And now these people are essentially being asked to explain their source of money, because a lot of it is Hawala, a lot of it is crypto, and Hawala and crypto are not legal, right? As far as these kinds of transactions are considered. So Indian taxman ED has essentially sounded an alarm, and now these people will be asked to explain their source of income. So woes multiply for some who had bought homes in Dubai. After notices from IT, they are now grappling with ED. They'll have to explain to ED why there are no records of bank transfers for the property acquisition. Most summons were issued in the north. So that's happening. Basically, it's in violation of the LRS scheme, LRS liberalized remittance scheme, which allows up to 250k USD. 250k is quarter a million, right? So 2 crore rupees. You can spend 2 crore in a year. But this particular property buyout has happened obviously with much larger sums. And earlier these people were shielded because this data wasn't getting shared. But somehow these people found out how they got the data, right? Some property records and so on and so forth. Regardless of what, this is gonna spell trouble for people who have bought properties in Dubai with illicit means. So, speaking of illicit means, ED has raided a company called Probo. How many of you know about Probo? Do you guys know about Probo? Does anybody know about Probo? Viewers of Thinkers Frequency? Okay, we've not talked about this, so I'll explain. But we've talked about the betting play in India, right? So it's something to do with that. So Probo, the option platform, Mr. Tiwari says. Opinion platform, Mr. Tiwari. You're right, Mr. Platform. Sorry, Mr. Tiwari. It is indeed an opinion trading platform, and it's been raided by ED. You know why it's been raided by ED? And what it does? So Probo claims to be like Polymarket. Polymarket is an opinion trading platform where it allows real money against the opinions you have. Like what's gonna happen? You have a real money opinion, and then you can place a bet, and then it'll be having a real opinion of your. And all the bets that go on Polymarket changes the odds as far as that is considered, right? So let's say they say Donald Trump is gonna win the election, and people have the option of, let's say, putting money that, and basis those bets they decide the odds, and those odds reflect the mood of the populace. That's the agenda behind Polymarket, right? But what Probo does is that it positions like itself like Polymarket. However, it's a sham. It's a sham. So this is not out. This is ED doesn't know this right now apparently, but I do. So I'm gonna share something, which is very very, you know, let's say sensitive. So when you're creating an opinion trading platform, right? The agenda is to invite people to your platform. Well, they create an event where an event is created, and then they start voting on that event and they start betting on that event. And that particular bet, whatever people on your platform are placing, reflects the odds. So the odds on your app should be the collective consciousness of the people in your platform. Okay? But you know what Probo does? Probo just borrows the odds from the internet, places them on their website, and asks people to put money on them. And when you place a bet on Probo, it just places an equal and opposite bet from a bot of Probo and shows Probo 1, 2, 3, or so on and so forth. Sometimes it matches, sometimes it doesn't. So it is essentially a fixed odds play where odds are being borrowed from the internet, let's say a platform like Betfair, and just people are just betting on that particular odd and it's borrowing the odds. So essentially what you're looking at is just a fake front of opinion trading. It's just pure illegal gambling. Damn, how do you know manage to know this stuff? Asks Mr. Tushar Tiwari. Now I'll tell you how I know this. I'll tell you how I know this. But just listen to this. Ideally, if Probo has like 6 people betting on their particular app, right? Those 6 people should decide the odd of an outcome, right? Because that's what's happening. However, in on Probo, what you're gonna do, what you're gonna see, is that all the odds on Probo are exactly the same as all the odds on, let's say, Betfair, or all the odds on any other platform. So they are basically borrowing the odds from the internet and positioning those odds as a reflection of their audience, which is not true. They're using bots to position as people, and then it's pure play, borrowed odds, illegal betting happening on Probo. And last year, it did a 492 crore revenue at a 100 crore pat. Okay, 492 crore revenue, 100 crore pat. 492 crore revenue essentially means that they were able to mobilize like thousands of crores in deposits, maybe 10,000 crores. So betting is betting, but positioning of betting as something like Polymarket is just a plain white lie. And these people have been getting away with that lie. And they have Peak XV as an investor, they have big guys as investors, and they're just pure play betting app positioning themselves as a Polymarket in India. So that is the bombshell, which nobody knows, which perhaps ED doesn't know right now, apparently. Now the question is, how do I know? Right? How do I know this? Nobody came to me in a dream, right? So the reason I know this is because I ran a platform called Virtual Voter. Okay? Now, Virtual Voter was a polling platform where people cast votes and polls happened and votes counting happened, and that was essentially the reflection of the mood of the populace. So we accurately predicted the Lok Sabha elections when everybody said that Lok Sabha elections are gonna have BJP 400 up ki bar 400 par. Our app was essentially predicting a hung kind of a scene, and that's what happened, right? With just 25,000 people, we accurately predicted the Lok Sabha election result when multi-crore uh, pollsters didn't. Now, whatever we did as far as polling is considered, we had like 1 million votes on our app, 1 lakh people, and so on and so forth. It was very hard to monetize Virtual Voter, okay? Because we tried tying up with TV companies, being their intelligence platform, and so on and so forth. But it was very difficult. Also, we were bootstrapped, so we had limited risk appetite, right? We couldn't have spent like more than, let's say, more than 25 lakhs to test out this platform and make it run, right? Which is very little amount of money as far as something like this is considered. So monetization of virtual voter was very hard, very very hard. We sold a few polls, we sold a few market research kind of polls. However, that wasn't the business we wanted to be in. So the next move for virtual voter was Polymarket, was the betting play, right? Now, as we explored the betting play, we found out how this betting particularly works. In that game, there was a player called Probo. So we inspected Probo, we figured out how the market works. We talked to a lot of people who are operating illegal betting in India. And those people were like just a mom and pop show, right? Very young people, a couple of people like with a staff of callers, being able to mobilize like 3 4 crore deposits per month and being able to make like 35 40 lakh rupees per month in net income. In net income, just the partners, two partners, right? 20 30 lakh rupees per month. So we figured out the market, and as we figured out the market, we saw that we are going to run a fair and square community voting, community betting play. Like virtual voter right now, votes are happening. We're just going to add money to those votes, right? And that will change the game for us, because and then we'll take a cut of all the deposits. That was the fair business model when that we were looking at. But when we talked to these illegal betting shops, they told us that no, you can't do that. You can't do that. What you have to be doing is borrowing the odds of the market and running those on your app and watching people bet on that. That's the business model. If your odds are different than the odds of the market, you're gonna get ruined, because khiladi people are gonna come on your platform and just ruin you, right? But we say that no, 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 we are not giving them a percentage, like a guaranteed return. It's a community bet, right? He said no community bet is gonna happen. Nobody's gonna bet on your community app when they know that they're gonna lose money on deposits, and then not enough people in the community and so on. So what you do is borrow the odds from the internet and just bring them on your app and then let everybody play. So those illegal betting shops told us that. We were like, okay, that sounds interesting. But Probo does this, we told them. They say, okay, really? So then we had a look at Probo and we checked all the odds Probo had on their app. All the odds that Probo had, claiming to be a community platform, all the odds were exactly the odds of the market. That means Probo was essentially just borrowing the odds of market, outside markets, displaying them on the app, and making it seem like it's somehow community betting play. This is a 10,000 crore rupee scandal, right? They've paid GST, they've paid everything. But this is, I can't use the F word, right? Unfortunately, but I want to. This is incredible. Anyway, so moving on, that they're getting inspected by ED. Just drop your thoughts on what you just heard. It's pretty incredible, right? It's pretty incredible. Yeah, it is. It is. It is incredible. Speaking of incredible stuff, which I have a habit of sharing, uh, op speed up US defense buys after Sindoor. So India is buying a lot of equipment from United States, defense equipment, of course, javelins and so on and so forth. Uh, it's almost like an emergency replenishment of resources they want to do. Now, isn't that crazy? You know why India is buying from US despite S-400s working so well, Russia being a long-term partner, a great friend? Why is that happening? Can anybody guess? Can anybody guess? Viewers of Thinkers Frequency, can you guess? I heard you. You're right. So Russia and China have been driven very close. Russia is deeply dependent on China, and because of Ukraine, America has pushed Russia into Chinese arms, right? With Russia and China essentially a block right now, India has to categorically, very carefully, artfully reduce its dependence on Russian supplies. And that's why India is buying a lot of, uh, anti drones and so on and so forth. So that's happening. And very interestingly, what's happening is that drone warfare has reached the tipping point, essentially the human tipping point. They've reached that. Now, the question is how is drone warfare, let's say, different from nuclear warfare, right? So there was a conversation happening between Mr. Elon Musk and Naval Ravikant, sir. uh, Mr. Naval Ravikant. These are supposed to be two very big people. Elon Musk, I'm a huge fan. Naval Ravikant, Mr. Naval Ravikant, not so much. But Mr. Ravikant actually said something really smart. Now, he said that drone technology is just like nuclear technology, but without a ceiling, without a limiting factor. What that means is, once you've made a nuclear bomb, there's no incentive for you to make a nuclear bomb which is like 10x better, right? Or 20x better, so on and so forth. Mr. Rashid Mahmood says, good morning. Good morning, Mr. Mahmood. So you don't have an incentive to make a 10% better nuclear weapon or 20% better nuclear weapon, right? So there's limits to that particular technology. However, there are no limits as far as drone tech is considered. Now, drone tech, you can keep improving just as you improve like a software product, right? It could follow the Moore's law. You know the Moore's law? Gordon Moore, the founder of Intel, came out with a law that compute capacity is gonna be exponentially moving every 12 months or something. He said it's gonna get squared every 12 months. I don't remember the exact terminology, but he essentially meant that technology is a super linear, the compute is a super linear concept and it just keeps going. And that Moore's law has proven to be accurate. Now, you can do that with drones because you can just keep improving drones, make them more intelligent, make them more effective, more lethal, and there is no ceiling to that. You know, it's like it's like fighter planes in 1920s, and whoever owns the more number of drones, whoever makes the most drones and better drones, essentially is the winner of any war. So you don't even need to fight a war. You just count the number of drones these people have and the effectiveness they have, and whoever has more drones just wins. So that's how effective drone tech is. And right now, a serious amount of display of this drone prowess is happening in Russia and Ukraine. And unfortunately, Mr. Trump hasn't been able to solve the Russia Ukraine conflict, just like he could solve the Iran Israel conflict, or let's say Iran Israel Gaza conflict. In whatever way it's solved, you can debate about that. But Russia is going for the kill. As far as Ukraine is considered, there's nothing US is being able to do about that. So they're just adding more weapons. So viewers of Thinkers Frequency would remember how we discussed in depth about this situation, this Kobayashi Maru situation. I'm not going to repeat that because we are already running out of time and we haven't covered a lot of ground. So Mr. Modi has met Namibian president. He's looking at uranium supplies and so on and so forth, ties in defense. In just 3 days, you've seen Mr. Modi talking to Argentina for drone tech. We're going to supply drones. Brazil for drone tech, for defense tech. We're going to supply them. And then now Namibia. So a lot of drone action happening. And this essentially means that India is going to put pedal to the metal as far as the whole play is considered, right? And it has to. It's a matter of survival. Speaking of survival, Starlink has gotten its final nod from Satcom services. Viewers of Thinkers Frequency would remember Starlink was looking at this nod. After this nod comes the security clearance, and after that security clearance, Starlink will be available. How much time that security clearance takes, that is yet to be seen. So there's Bharti Utelstat OneWeb. There's Geo, you know, doing its own. Then there's Starlink. Bharti and Jio are going to be distributors of their own SATCOM services and also Starlink. Then there's Amazon Kuiper. Then there's Vodafone also, which is tying up with somebody. Then there's Indian play, right? Anant Technologies, which is making a geostationary satellite based SATCOM service. So a lot of SATCOM services happening. They get a few nods and then there's the security clearance thing happens. Bharti and Jio had got their security clearances in 2022 and 2024. Bharti was the early mover in this, and now Starlink is also getting it. So let's see how soon we get these things. Moving on, uh, telcos divided over allocation of microwave backhaul airwaves. So tech companies wanted delicensing of some airwaves. Telcos didn't want that because it's gonna be a loss of money. Then there's also gonna be, you know, uh, there's differences in opinion as far as the whole telco sector is considered. It's not like all telcos are singing the same tune. There's a lot of complicated auctioneering of happening of 6G Z waves and so on and so forth. We've discussed it a lot in depth, and essentially what we are looking at is that tech players and network equipment makers are looking at administrative allocation, right? They don't want to be now telcos don't want delicensing of the 6G band and V band because telcos, that's their bread and butter. If they get delicensed, they may lose the opportunity of making money. However, tech companies want it, and they say it's necessary for Indians to have better internet connectivity. So of course, tech companies gain a lot with the loss of telco companies. That always happens. That happened yesterday, that is happening today, and that's probably going to happen tomorrow. Telco is a very, very difficult play, right? We talked a lot about this, right? Viewers of Thinkers Frequency, you remember this? I'm sure you do. I'm sure you do. So, fertilizers company turned to EU, Russia, and West Asia as China halts exports. So, viewers of Thinkers Frequency would remember we talked about China blocking the rare earths, and that's sending the entire electric vehicle industry and even the electronics manufacturing industry, like the speakerphone manufacturing play, into a jiffy. Now they've blocked the fertilizer supply. Now India is in trouble because India needs those supplies to make their own fertilizers and so on and so forth, and use those fertilizers for agriculture purposes. Now it's trying to, because China's blocked those supplies, what India is trying to do is trying to tie up with European supplies, West Asian supplies, Russian supplies to be able to meet those demands. So China is really playing tough with its might as far as the global trade is considered. You can't, like, why is anybody surprised? Right? Why is anybody surprised? So that's what's happening. Road Ministry is making progress. They're looking at rebooting the BOT rules. The BOT rules is essentially build, operate, transfer routes, where private companies build something, operate, and then transfer it, and so on and so forth. So that's happening. A lot of action happening as far as road industry is considered. Roads and building of roads is considered. You know why? You know why this is happening? Why is this happening, folks? You remember? Viewers of Thinkers Frequency would remember, right? You remember? We talked about this. We talked about this. Yes. So India is looking at reducing the cost of logistics as a percentage of GDP. So right now, they used to be at 12%, 14%. Right now it's at 9, 10% or something. And they want to bring it to 9%. With every percentage reduction in logistics as far as GDP is considered, you see everything changing. Everything changes when logistics becomes easier. If you're making something and if you're able to transport that something easily at a lesser cost, the consumer benefits, you benefit, the economy benefits, the cascading effects of it, like the upward spiral, is just beautiful, right? It is beautiful. So that's what's happening right now. India is rapidly becoming the top destination for APAC, Asia Pacific occupiers, aiming to expand their warehousing footprint. So, with logistics comes warehousing. We've talked a lot about this in depth, and we have to move forward very, very quickly because it's already 9. Company registrations are rising. 75 crore plus payments to go via eKuber. eKuber is the government platform which is supposed to track, spending, department and ministry spend. So that every transaction above 75 crore is going to go via eKuber. That'll bring a lot of transparency, accountability, and so on and so forth. Mr. Piyush Goyal says UAE UK FTAs to give greater market access to agri. So India is struggling with negotiations as far as US is considered because of the agri sector. So now the counter move to that is India tying up with other countries for access to their markets for its agri exports, right? How beautifully these things work, and how beautifully they impact what happens to businesses. As I always say, outcomes in business are mostly the result of political will. How the politics takes care of your business is essentially how far a business goes. So when we think about, oh, there's market, right? There's Adam Smith's invisible hand and so on and so forth. That invisible hand is the hand of the politician in charge, always. So that's the inside. Remember who told you first. So moving on, assessing impact of 50% US tariff on copper. You remember that US essentially laid tariffs on copper. Do you remember why it laid tariffs on copper? We discussed about this. Viewers of Thinkers Free, mental workout. Just remember, tell me why US is thinking of a 50% tariff on copper manufacturing. Why? I'll give you 5 seconds. Oh, you're right. I heard you. Because copper is an essential ingredient, or let's say component, as far as the chip manufacturing is considered. And if US is totally dependent on foreign copper supplies, it won't be able to make chips. Without chips, there won't be no data centers, there won't be drones, there won't be anything, right? Chips are the cornerstone. Not the uncle chips, but chips, the electronics chips. So now India is essentially looking at what's going to do with the 50% tariff, because India exported some copper to US. US also put a 50% tariff on steel and aluminium, and India exports like 7 billion worth of steel and aluminium, some 1 billion aluminium, 5 billion steel. So India is looking at what to do as far as that is considered. So India is also looking at retaliatory tariffs on US as far as steel and everything is considered, right? Auto parts. US has also tariffed auto parts exports from India. Even though there's just $2.2 billion worth of exports, they've tariffed them. Now just imagine being a businessman. You're exporting auto parts to US, and suddenly US says that you're getting tariffed, man. Suddenly your business goes dry. What do you do? Right? What do you do? So India is looking at that. Very, very interesting stuff happening as far as the geopolitical business impact to play. Speaking of tariffs, Samsung is shoring up its India play. Samsung will manufacture more in India. Why? Why do you think Samsung is looking at manufacturing more in India? Because India is getting tariffed the least. Vietnam is getting tariffed like hell. China is going to get tariffed, obviously. Bangladesh is getting tariffs for its garments exports, but India is a better bet. So Samsung, which is perhaps the world's biggest smartphone manufacturer after Apple, I think that's true. One of the biggest, if not the biggest, is going to be manufacturing more in India, which is great news, right? So a lot of action happening as far as India is considered, manufacturing wise. Moving on, investors turn cautious on unlisted stock companies after SGB offer pricing shock. So if you guys remember HDB, does tariff have any business use apart from politics? What do you mean by that, Mr. Tiwari? Could you explain the question? Business use. Of course, it's all business, right? It's all business. Why are countries giving other countries tariff? To protect their own businesses. Why did US manufacturing die? Because China devalued its currency and its exports became so cheap that it became impossible for anybody to compete with them. At that place, what should America have done, or what should other people have done? They should have protected their domestic industries by tariffing exports from China, so that they just don't outcompete your entire business base, right? Manufacturing base. So that's what tariffs do. Tariffs are strictly business. And tariffs mean business. So when Trump says 50% tariff on copper, right? What's going to happen? Copper mills are going to start in US itself. So US is going to make their own copper. That's what tariffs are for. They incentivize local production. Moving on. Equity gets some bang, funds a lot more bucks in June bounce. Of course, that's happening. HDB gave a 40% loss to people who, essentially bought its unlisted stock. Some problems arose and their stock went down 40%. A lot of people try and buy unlisted company stocks because they think when it IPOs they'll get a pop and it'll be good. Sometimes it doesn't go. Or most likely it's a good strategy if you can get those unlisted shares. More often than not it works. However, sometimes it doesn't. HDB was one of the cases. Asian Paints exits AkzoNobel. So Asian Paints used to have 4.4% share in AkzoNobel. But you know what happened with AkzoNobel, right? Dulux, the parent company of Dulux, the Japanese paint company. JSW is buying AkzoNobel. So now JSW is buying AkzoNobel, so naturally Asian Paints needs to go, right? So they've sold their stake in AkzoNobel. A lot of business action happening in the paint world. Very, very difficult play. Moving on. Dollar is falling, but rupee didn't gain as much as Asian peers. Now dollar falls. Ideally, the fall of dollar is a very good news for importers, right? Because a lot of US imports a lot and all imports happen on dollar. Good news for imports, but bad news for exports, because you get in dollars and now somebody's paying you in dollars, but those dollars are worth less now, so it's a bit of a problem, right? However, Indian IT is divided on that. Why? Because it's not just US they take money from, right? They also take money from, let's say, Europe, Japan, and so on and so forth. So the companies who have less dependency on US as far as their business is considered, they are happy that dollar is falling, right? Because the foreign exchange thing and the US thing. So that's very interesting, right? Ideally, if dollar is falling, you'll be looking at like exporters being very sad, right? But some IT companies are happy. So that's that. Moving on. US dollar slide may help IT add 70 to 300 BPS to Q1 revenues. Like I told you. A lot of IPOs happening. That bit is good. I hope I'm not missing anything. TCS. I'm not bullish on IT, as everybody knows. Indian IT is gonna face a lot of shocks, most of which are gonna be lethal. So, but for now, people are watching TCS and what happens to that. I just hope I'm not missing anything. I told you everything, right? There's a lot of action happening as far as US is considered. The judge says, I've seen a lot, but I've not seen Besharams like Byju's. They're gonna have to pay $10,000 every day for all the violations they've done in the contempt of court. But Baiju says no, 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 no. We're gonna fight it out. And that's pretty much it, folks. I have been very quick. It's already 9:09. I started late. I'm sorry about that. Uh, it was a late start. I started at 8:10, but we'll have to go now. I'll just tell you something that I'm missing. Oh yes, I didn't want to miss this. OpenAI is launching its own web browser in challenge to Chrome. So OpenAI has really hurt Google, and Microsoft has struck gold with OpenAI because Google had a monopoly on search, and with search Google had a monopoly on the internet essentially. But what OpenAI and ChatGPT started doing was they provided a replacement of Google or search itself. So people are not doing Google search anymore that much, right? Microsoft had Bing trying for like 2 decades to topple Google Chrome. Nothing could happen. Oh, sorry, Google search. Nothing could happen. Microsoft had its own Edge, the Internet Explorer. Nothing could happen. And then came ChatGPT, and Google is instantly screwed, right? Because Google searches are declining. With search getting declined, advertising revenues are going to get declined, and so on and so forth. And now, if that wasn't enough, OpenAI is launching its own web browser to undercut Google Chrome. If they launch their own web browser, another stream of great revenue might just go out of Google's hands, and that will be 2 points for Microsoft, right? 2 points for Microsoft. So, EU's tariff negotiations, Airbus set to fly pit stop for Ferrari. So EU is trying to negotiate a lot with US, and seems like Airbus, the aircraft manufacturing company, is going to get a lot of help. It's coming under those exemptions play because those guys need. And Ferrari is not, because it doesn't have any US local manufacturing. So Ferrari is essentially just manufacturers in Europe, Italy, and they're not going to get those exemptions, while Airbus gets a lot of benefits as EU negotiates with US as far as tariffs are considered. So just consider you are the owner of Ferrari, right? And you are the owner of Airbus. You're both scared with what happens as far as tariff negotiations are considered, right? And then suddenly Airbus gets a lift and Ferrari doesn't. Political will, folks, and how it happens. With that, we come to the end of the 46th episode of Thinker's Frequency, the daily mental workout. I hope you had a great workout. The daily dose of insights and analysis which don't lead to paralysis. Right before we punch in, it's 9:12. We're gonna punch in. I wish you all a beautiful day, personally and professionally, and I hope to see you tomorrow, same place, same time. Bye bye.